the fear of making a massive mistake, and honestly, it's enough to stop most people cold before they even start. But what if that fear was the only thing standing between you and building real wealth?
And you know what? That feeling is completely normal. Josh Dorkin, the founder of the massive real estate community Bigger Pockets, says this fear is the single biggest hurdle for new investors. So the key isn't to pretend it doesn't exist, but to face it and conquer it.
And that's exactly what we're going to do right now. See, the antidote to fear isn't just blind courage, it's knowledge. It's having a clear, actionable plan that takes all that uncertainty and turns it into pure confidence.
This is Brick by Brick Channel, where we help beginners build wealth through real estate one property at a time. And today, we're handing you the blueprint.
We've broken this whole thing down into 5 clear stages. First, building your foundation. Then, assembling your team. After that, we'll analyze the numbers, run through your due diligence checklist, and finally, get you to your first deal.
All right, let's start at the beginning and tackle that biggest hurdle head-on, the fear of the unknown. This is the stage where so many people get stuck in what's called analysis paralysis.
So how do you conquer it? With education. Long before you ever even look at a property online, you need to immerse yourself. We're talking books, blogs, podcasts, the whole 9 yards. You've got to learn the lingo so you can talk the talk with the pros. You have to really get key concepts like cash flow. And most importantly, you need a business plan. This isn't a hobby, folks. It's a business. That plan is your North Star. It defines your goals and the exact criteria for what makes a deal a good deal for you.
Now, here's something that should be a huge relief for most of you just starting out. You are not supposed to know everything. Real estate is a team sport. Your success is going to depend on assembling a team of experts who have your back.
First up, your real estate agent. But listen, not just any agent. You need an investor-friendly agent. There's a big difference. They get your goals, they know how to spot potential deals, and they can navigate the local market with their eyes closed. Think of them as your scout on the ground.
Next up, your accountant. A good CPA, especially one who owns rental properties themselves, oh man, they are an absolute game changer. They will help you structure everything to maximize your tax benefits and will probably save you way more money than you ever pay them. Don't skimp here. Get a pro.
And this right here, this is your defense team, the inspector and the contractor. A professional inspector is like having X-ray vision. They find the hidden issues, the bad roof, the faulty wiring, the cracked foundation, that could turn a dream deal into a total nightmare. Then your contractor comes in and tells you exactly what it's going to cost to fix it all.
So just to recap, your full power team includes that agent, a mortgage broker, a real estate attorney, an accountant, an inspector, a contractor, and maybe even a property manager. These are the experts who fill in your knowledge gaps and protect your investment. With them in your corner, you can confidently move on to the next step, which is analyzing the numbers.
Okay, so you've got your foundation of knowledge, you've got your team. Now for the part that scares a lot of people, the math. But I promise you, you do not need a degree in finance for this. Most of the math you'll ever need is stuff you learned in grade school. This is the million-dollar question, isn't it? How in the world do you know if a property is a great investment or just a money pit? Well, it all boils down to a few key numbers.
And the single most important number for a rental property investor is cash flow. Plain and simple, it's the profit you have left in your pocket every single month, after all the bills are paid. Positive cash flow, that is always the goal.
And what's great is just how simple the formula is. You take your total income, that's the rent plus any other little fees, and you subtract your total expenses. We're talking the mortgage, taxes, insurance, maintenance, everything. Whatever's left over, that's your cash flow. It's really that straightforward.
Now, for a quick way to screen properties, a lot of investors use a rule of thumb like the 1% rule. The idea is that the monthly rent should be at least 1% of the purchase price. So for a $150,000 property, you'd want to see at least $1,500 in monthly rent. Look, it's not a perfect rule for every market, but it's a fantastic first filter. If a property passes this quick test, it's probably worth a deeper look. If not, you can probably just move on.
So, once you find a property that looks good on paper, it's time to play detective. This is called due diligence. And let me tell you, skipping this step is the #1 reason bad investments happen.
Your due diligence has a few parts. First, the financial. You have to verify the seller's numbers. Get your hands on the actual rent rolls, the tax bills, the utility costs. Don't just take their word for it. Second,
the physical. Get that professional inspection we talked about. You need to know the true condition of the foundation, the roof, the HVAC, all the big-ticket items.
Next, you've got the legal side. Your attorney is going to run a title search to make sure there are no hidden claims or liens on the property and to make sure the seller can actually, sell it to you. You'll also check zoning laws. And finally, you do a market analysis. You research the neighborhood, the demand for rentals, and what other similar properties are renting for.
As Doss and Spalding Properties puts it, due diligence is basically your shield. It's what protects you from those nasty, expensive surprises after you own the place. This is what gives you the power to negotiate a better price, or if you need to just walk away from a bad deal.
All right, we've gone all the way from overcoming fear to the critical investigation phase. Now, let's put it all together into a simple roadmap for you to take action. And here it is. This is your path. It's 4 simple steps. First, you conquer fear with knowledge. Second, you build your expert team so you're not alone. Third, you learn to analyze the numbers so you know a good deal when you see one. And fourth, you conduct that thorough due diligence to protect yourself. You follow these steps in this order, and you are ready to make your move.
Following this roadmap turns what seems like an overwhelming process into a series of small, manageable steps. So the only real question left is, are you ready to lay your first brick?
If you got value from this, hit the like and subscribe, and keep building your real estate foundation, brick by brick. This video was sponsored by Riverside Realty.